Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be doing a deep dive on Bill Ackman's restaurant stock investments and exploring the portfolio changes of his hedge fund in the most recent quarter. If you haven't already, please click the like button. It is the only way YouTube really knows that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. It is free to subscribe and your support really does so much to help grow the Food Fund YouTube channel, so please consider subscribing. We have a lot to cover, so let's go ahead and dive right in. Cue the logo. Bill Ackman is clearly a strong public market investor. With a net worth of about $4.3 billion, he clearly is getting something right. Over the years he has shown a particular interest in food, beverage, and restaurant stocks, with some of these investments having turned into huge money makers for Ackman. Let's watch an excerpt from a recent interview on why he loves restaurant stocks.
And the beauty of the restaurant business, and our best track record is in restaurants. We've never lost money. We've only made a fortune, interestingly, investing in restaurants. A big part of it's a really simple business. And if you get Chipotle right and you're at 100 stores, it's not so hard to envision getting to 200 stores and then getting to 500 stores, right? And the key is maintaining the brand image, growing intelligently, having the right systems. Now when you go from 100 stores to 3,500 stores, you have to know what you're doing. There's a lot of complexity, right? If you think about your local restaurant, the family's working in the business, they're watching the cash register, and you can probably open another restaurant, across town. But there are very few restaurant operators that own more than a few restaurants and operate them successfully. And the quick service business is about systems and building a model that a stranger who doesn't know the restaurant industry can come in and enter the business and build a successful franchise.
Ackman likes investing in restaurant companies because they tend to be easy to understand businesses and are fairly predictable. Sentiment is usually positive around restaurants, and consumer trends tend to change very slowly compared with other industries. He also likes that great restaurants are essentially systems that scale very well. Bill Ackman's portfolio reflects his interest in restaurant companies as well as other food and beverage stocks. If we look at Ackman's portfolio starting at the end of 2007, we see that McDonald's held the top position in his portfolio. At that time, it comprised nearly 40% of his $2.44 billion portfolio. From that point on, Ackman would dabble in various restaurant, food, and beverage companies including Wendy's, Yum Brands, McDonald's again, and Mondelez. He first entered Mondelez as a second-ranked holding in 2010, and it occupied 30% of his portfolio. Mondelez would grow to become the number one holding a couple of quarters later. In 2012 he sold out of Mondelez and largely abandoned food and restaurant stocks until opening a position in Restaurant Brands International at the end of 2014. This position would grow to become his number one holding by 2016, comprising about 22% of his portfolio. A few quarters later he opened a small position in Chipotle, which was under duress due to food quality issues at the time. In the following clip, Ackman describes what drove his Chipotle investment.
So Chipotle, we're back to core Pershing Square kind of investments. So instead of investing in Chipotle when they're doing extremely well and the stock's 730, we wait for an otherwise great company with a great brand to make a mistake and for people to lose confidence in the company and the management, the board. And that's when we can be most effective. And we've been very effective in fast food. First investment in fast food was Wendy's, doubled our money. McDonald's, similar kind of
Involved Burger King at one point.
Burger King, we're still a major shareholder. It's now called Restaurant Brands. We made 3.5 times our money with that company. So it's a space we know well. It's a simple, predictable, free cash flow generative business. It's an unlevered company with a strong balance sheet. They own all their stores, which is very important because they can, when you have a problem, it's easier to fix it if you control the store base. And it's the first, I eat on a regular basis at Chipotle. I eat on a less regular basis at the other fast food companies we've invested in. So I like the food. I think it's healthy. I think it's good for America. I think they got a sustainable moat around their business. And I think the food safety issues they've had, I think they've addressed properly, and it's a matter of time before the customer comes back.
His Chipotle position quickly grew and replaced Restaurant Brands International as the #1 holding by 2019. We can also get a better understanding of why he loves Chipotle and made it his #1 holding in this next clip.
What's interesting about Chipotle is what they've achieved is difficult, right? They're not buying frozen hamburgers getting shipped in. They're buying fresh, sustainably sourced ingredients. They're preparing food in the store. That was a first, right? The quality of the product at Chipotle is incredible. It's the highest quality food you can get a serious dinner for under $20, and eat really healthfully and very high quality ingredients. And that's just not available anywhere else. And it's very hard to replicate.
A quarter earlier, Ackman had started a position in Starbucks. His thesis for the investment was very strong, as he shared in an interview.
You talk about Starbucks, for example. So we made an investment in Starbucks a couple of years ago, not quite a couple of years ago. And what we saw was a simple, predictable free cash flow generative business that we could understand. And so it met the first screen. You think about coffee. People have their coffee habit. Starbucks has built in our view, a very durable franchise. They earn very high returns on, every store that they build. And it's a habit that people don't like to break. And so we had confidence in the durability. And, the benefit of call it the restaurant business is once you understand the economics of one box, and then you have a company that's built, thousands of boxes over time, it becomes more predictable and easier to understand what that business will look like over a very long period of time.
This holding would go from a 13% position to an 11% position before Ackman exited in 2020. He then rolled those earnings into Domino's Pizza, as he would explain in this next clip.
We sold Starbucks, which is really an amazing business, largely because it got to a price that was hard to earn the kind of excess returns we like to earn over time. Kevin Johnson's done an amazing job. The team's done an amazing job. It's really a great business. But the stock just recovered too quickly, too fast. And I think investors will do well with Starbucks. But for a very brief moment, another restaurant company that we followed very closely over a long period of time dropped dramatically in price for reasons we didn't understand. And we were able to swap Starbucks for Domino's Pizza. So,
okay. Well, that's been
we didn't get as much as we would like, but we own a little under 6% of the company.
Eventually, Chipotle and Restaurant Brands International would go from the #2 and 3 holdings to the #1 and 2 holdings, respectively. In the most recent quarter, Ackman's portfolio has ballooned to $10.76 billion and still has Chipotle as his largest position at 20% after selling nearly 10% of that position. Restaurant Brands International has dropped to #3 and comprises 17% of his portfolio. Diving in deeper into his individual positions, we see that Ackman has actually been selling chunks of Chipotle since 2018, though he has maintained the Mexican restaurant at roughly a 14% to 23% position. For Restaurant Brands International, Ackman began selling in 2017, reducing his position from 41% to 9% in 2020. However, he bought at the bottom of the market in 2020 and seems to have been selling only a little to keep the holding less than 18% of his portfolio. It is clear that Ackman was content to collect dividends from Restaurant Brands International, as the company has consistently raised dividends for nearly 10 years. So what can we learn from Bill Ackman's food and restaurant stock moves? For one, it is clear that Ackman recognized the changing consumer trend from food to restaurant spend and sold out of his food holdings in 2018, leaving only restaurant investments. If we go to market share, we can see that the food industry, while larger, is actually losing market share versus the restaurant industry, which is gaining market share, as indicated by the red color for market share losses and green for market share gains. It is no mistake that over the past 5 years, consumers have shifted to spending more of their eating budget at restaurants. Another lesson from Ackman is to focus on the long term. Ackman prioritizes holding companies for many years and has an average holding period of 16 years. Long-term holds can help erase investment mistakes in good companies and can allow for compounding in great companies. I have learned a tremendous amount from Bill Ackman's investments and look forward to learning from other food and restaurant super investors as well. These portfolio reviews are super insightful for me, and I hope you find the same value from videos on this channel. Many thanks for watching. What are your thoughts on Bill Ackman and his food investment portfolio over the years? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.